Welcome latest Motley Fool scoreboard. I'm on in Chock-a-Blue, and we've got longtime Fools Jason Hall and Rick Menares giving a 1 to 10 rating to a Fool favorite. It's the Trade Desk, ticker symbol TTD. Talk about the business first, including factors like industry and competition. 10 is invincible. A 1 is hopeless. Both of you have 8s, Rick.
Yeah, so the Trade Desk operates an independent media buying platform using algorithms and other ad tech tools and gizmos to allocate client marketing budgets across various channels and devices. The Trade Desk has been able to consistently gain market share with its superior programmatic advertising model with strong client retention rates because it works. It proved mortal earlier this year, missing its earlier guidance for the first time in 33 quarters as a public company back in February. It bounced back in May with another blowout performance. The Trade Desk is 33 for 34. I like those odds. 8.
Yeah, and rising for me in terms of business quality. Like Rick said, we saw some mortality last quarter, but it does seem like the struggles that were emerging as they work to transition their customers from Solimar to Kokai, their newer platform. They're addressing them as Jeff Green laid out. And the value of usable, actionable data in advertising is immense. This is the undisputable leader for large brands. It's not a true moat. It's in the lead, and I believe it's on the cusp of beginning to build on that lead again with Kokai.
For management, a 10 is Warren Buffett, a 1 is Homer Simpson. Both of you rate management very highly at 9s, Rick.
Yeah, so Jeff Green founded the world's first online advertising exchange that was ultimately acquired by Microsoft in 2007. He started the Trade Desk 2 years later. He's well-liked by investors. These stocks at 25 baggers since its 2016 IPO. He's well-liked by his employees. He has a 90% approval rating on Glassdoor. I don't know if Microsoft will buy another Jeff Green company, but I know I wouldn't mind buying whatever he winds up starting up 2 years after that. If it happens, I'm a 9.
Absolutely. Jeff Green is a category creator, like you said, Rick. But more importantly, he's a rare founder who's also a great CEO. That's not the combination you always see. A few months ago, when we saw the stumbles, I was worried that his co-founder, Dave Pickles, who stepped down back in 2023, that was a bigger concern with kind of your technology guy leaves. I don't have those concerns now.
For financials, a 10 is a fortress, a 1 is yikes. Jason's at an 8.5. Rick, you're at an 8.
Yes, so advertising can be cyclical, but don't tell the Trade Desk. Revenue has risen at least 23% in each of the last 10 years. Its guidance calls for at least 17% year-over-year revenue growth for the current quarter, but that's what it said 3 months ago, and it broke through with a 25% increase in the May report. The Trade Desk has a cash-rich balance sheet with no long-term debt outside of long-term lease obligations. I'm at 8.
Yeah, the balance sheet's pristine. It's also, like you said, it's a very cash-generative business. And there is cyclicality in the ad business. There's no doubt about that. But 2 things have been helping. Number one, the bigger trend of the transition to programmatic as more money moves to programmatic advertising has been great. But I think the business is really maybe more relational to ad spend and not necessarily directly driven by it. Its customers pay to get access to its platform, not to buy and sell ads. And that's a bit of a differentiator with its economic model. And I think it helps soften the business. Along with that asset light part of it, that means it's not going to struggle with high fixed costs when we do see more maturity and maybe the ad spend does pull back and that affects revenues.
Jason, let's talk valuation. How well will Trade Desk stock do over the next 5 years, and how safe is it? 10's a sure thing, 1's a lottery ticket.
Yeah, I think the chances of outperforming the market are extremely high. I'm going with 10 to 15% because we've seen a faster recovery from some of the lows following the kind of debacle after the Q4 quarter came out. But I do think that even though this is not a cheap stock, the unit economics, the quality of its business, the cash flows, the lead it has over its competitors, and this relentless drive by Jeff Green to continue making sure that it has the very best product and it stays ahead of competitors, I think it's actually relatively safe as a long-term hold. Going to be volatile, but I think pretty low probability of losing money. So my safety score is 8, which is probably higher than a lot of people would expect for a stock that's this volatile.
Yeah, so the Trade Desk isn't cheap, but it's rarely been cheap. It just trades at various levels and tiers of expensive. Right now, it happens to be trading well below the all-time high it hit back in December. So I guess that makes it expensive light, but not cheap plus. It's trading at a 2025 forward multiple of 13 times sales, 45 times earnings, and almost 50 times free cash flow. So it's not cheap. But the future is bright. Revenue should double in the next 4 years, and the bottom line should grow even faster. It should beat the market from here. So 10 to 15% is my score a year. I went with a 7 for safety because despite the strong balance sheet and market position, there are risks here beyond the valuation. It's in the process of rolling out its AI-fueled platform that initially got off to a challenging start. Now it's 2/3 of its clients are on it, so it's already comfortably there. But there's still a lot riding on the overhaul, and that introduces risk and opportunity to the stock.
Time for everyone's favorite topic. Jason, is there a company in the trade desk space that you like more?
No, I don't think so. Not in ad tech, and I don't want to squint too hard to find something just to give a stock. I could make the case that the supply side is getting more compelling. The line is starting to blur between the demand side and the supply side. And we've also seen more consolidation on the supply side as well. But I still like the trade desk the best because of that economic model I've talked about. And it's plugged into really the concentration of where the ad dollars are coming from. And the product by far is the best.
Yeah, so I did squint my eyes, and I came across Roku as a potential replacement. So connected TV advertising is a big part of the trade desk story, and the same goes for Roku. More than 85% of Roku's revenue last year came from platform revenue, consisting largely of the connected TV ads and the companies paying Roku for leads. Roku is closing in on profitability, but elsewhere, it's trading for just 2 times this year's projected revenue and half of the trade desk forward free cash flow multiple. Roku is a leader in the field, and it has posted consistent double-digit annual revenue growth over the last 10 years. So I went with Roku.
Rick, if you're squinting your eyes, so is Jeff Green. After all, the trade desk is starting to move more into Roku space.
Likewise.
Very, very fair. Thank you to both Rick and to Jason. They've given the trade desk a strong overall score of 8.1 out of 10, which means I must own it. It's been a long time holding of mine, and I've been buying more earlier in the year when on the price weakness. Look out for a new scoreboard every market day at 7 p.m. Eastern. Next up is something good, I promise. Till then, Fool on.
If you're one of the biggest brands in the world, you're either directly working with the trade desk through the platform or the agency, more likely in a lot of cases, the agency, your ad agency is a partner. So you're using it for analytics, you're using it to find inventory, to place ads,